All right. It looks like we're at 1 Eastern. We'll give it a few, but otherwise, think we can kind of get started. So we'll just give it a quick little round. But for those of you follow along our journey, we were just at the MBA Servicing Solutions Conference in Texas, and wow, a good amount of people there. But it's good to be back. We're back, and we got hit with some snow, but it's always good to be back. So I'll get started. Hi, everyone. My name is Io. We're joined here by Moyne, our resident technologist.
It's great to be here, Io. We just got back, as you mentioned, from the MBA Servicing Solutions last week, and AI was everywhere on the agenda. And so right now there's a lot of noise and fear out there about, what's real, what's not. And so the goal is to, cut through that noise and give you the facts.
Yeah, and for those of you who are new to the hotline, we know a few of you joined coming out of the MBA Servicing Conference. This is really all about helping the community grow, creating a forum. Some of you sent questions in beforehand. We know the group tends to be a little shy, but today we'll jump into AI hype versus fiction. Or fact versus fiction is probably how I'd put it. We're going to break down what AI is actually doing in the servicing workflow, just so that folks can start to get ideas and see what some of the larger players are doing and see if any applies to some of your workflows there. So I'll hand it off to Moyen.
Sure. So I think the first place a lot of people want to start is the workforce. And so the hype is that AI is going to replace everyone in the servicing shop tomorrow. And so great. So now that we have that first slide up from the MBA's AI Real Impact session, let's actually go through what's actually happening. And so as we can see, the reality in 2025 was that there's widespread adoption across financial services. And so what that means is, yes, a lot of companies and institutions have put that corporate card down and said, yes, we are buying some access to Anthropic or OpenAI or products from Microsoft or Google. So a lot of people are having that moment occur to say, let's figure out how we can use AI. But the thing though is it's in very specific use cases right now still. And so it's not like it's running the whole loss mitigation department yet or anything like that, but it's all about the idea that there are specific moments that you can use AI to really drive down cost or increase efficiency or help your team actually get through the work a lot faster.
And so for those of you who weren't at the Servicing Solutions Conference, these slides are kind of things that folks talked about there. And one of the interesting things I recall, Moyen, was something about driving down cost.
Yeah. And so going through the idea of like the call center, so a large part of what we do as a servicing world or entity is how do we manage these homeowners better? And so part of that is, people call in at any hour where they can say like, hey, like I have problems. How can I get help? And so some of the problems are a bit more routine where it's essentially, hey, how do I log in? Or can I figure out when my payment is due? How do I make a payment? What is my escrow balance? And so for a lot of that, that's kind of like answer question where there isn't as much nuance where previously before AI, it would be someone on your team picking up that phone call, authenticating who they are, and then, looking up that information in the system to tell them, and then hopefully that homeowner is like, great, thank you, have a nice day. And so that's where we're able to see some of that cost reduction with AI, where it goes from about like $6 a call to $1 to $2, where the AI is actually really good at, getting that information. But where AI probably shouldn't be deployed yet is walking through that really complex loss mit application where people are facing hardship and they need that human judgment and also more importantly, empathy to guide that homeowner through that process. And so what we've seen is the case of, hey, in super targeted cases where the answers are simple, AI is a great place to lean in. But for things that require human judgment, I think we're still quite a ways away from just rolling that out and saying, all right, AI does all of our calls.
Right. And that I think was the theme, is really like segmenting where to kind of implement some of these solutions into your workflow. I think it was great to hear from some of the people, what I'd call as being the pioneers up there. where, for certain things that are, when's my payment due, or, where can I find this stuff? That's what it's great for. But for things that require a human touch, like Moyen said, that's where the human staff still reign supreme, and where they should really focus their efforts on. So what does that mean for human staff? I think there was a slide that the MBA brought up, and we can just put it up right here, where it kind of talks about the AI layer, and I'll hand it off to Moyen to kind of walk through that. So.
Sure. And so on the left, we have the AI layer side, where it's basically things that do well with scale, consistency, and it's pretty much the same thing, just happening at different time scales. And so like right now, because of, the reality of working with, the office hours and availability in life, is it's not super easy to provide that customer service support, at 8 o'clock on a Friday night. But the thing that AI is really good at is saying like, hey, like we hear you and we understand that this request is in. If it's something within that AI's power, so kind of going back to that idea of like, what's my escrow balance or when's my payment due? AI can actually get them that answer at 8 o'clock on Friday. But what we see on the right with the human side is that's the human judgment, trust, and context, where you probably wouldn't want AI to necessarily go through that process of saying like, hey, I'm thinking of going through bankruptcy. You wouldn't want AI to have free reign to just kind of go through that workflow and, start sending information and working on, agreements and drafts and things like that. But that's where the human judgment and experience comes in. And so that's actually where I think in the future, we'll be able to actually reallocate a lot of work and attention from, routine, like, hey, how do we, enter this loss mid application into our system? How do we answer routine questions? And we're able to like kind of upskill staff to really focus on the things that are really interesting, complex, and really drives the human outcomes. Io, kind of a random question for you. Are there any interesting ways that you've seen people kind of retrain staff from the more routine workflows to this area that has higher human layer? What have you seen in that?
Yeah, so I think I think as most folks that work in servicing, a lot of it is just resources. And so when you're really focused on doing kind of the volume of calls, and you're able to triage some into more specific roles, you're able to basically use some of those time and responsibility to let folks, for example, explain escrow analysis and why certain things went up, or guide them through the different options that they have when experiencing a hardship. It was interesting too, because right before this, I was watching a video by a company called Sierra, which is one of these AI voice customer support agents. And the gentleman, Brett Taylor, who runs the company, is working with Rocket Mortgage on a couple things. And I thought that was an interesting way to kind of think about where they kind of fit in. So for example, what they're doing is making proactive alerts on calls to homeowners. So we know if we had infinite time in the day, we'd love to get through every single homeowner. But that's one thing that AI is great at, is reaching some of those folks in a way that is more constrained and doesn't allow it to veer out the contours off what people may do. And there's a lot of great technology solutions that are working on some of these problems. So that's really exciting. And I think the other thing that, we'll probably touch on is just, the idea of the recapture flywheel, which is the other theme that keep coming up. Equity alerts and things like that. You'd be surprised some folks, maybe do or don't know what's going on with their home. So I like to say, and maybe this is a little bit more of my personal bias here, is what you'll see is AI can kind of transform the servicer from, what I'd call is a role that, masters a lot, to really using some of the specific knowledge and brain power that a lot of folks on this line have to really guide someone through that homeownership journey. It's funny because when we think about interacting with homeowners, I think a lot of people think on the origination side is where that kind of sits, but it's really that journey relationship that you're forming, so that when they go for their next loan or are looking for a HELOC or another product, that you're first in line there. But Moyen, anything else on that side that you kind of have heard or seen?
Yeah, an interesting trend that I've seen is the idea that it's actually changing the composition of who we recruit into these more entry-level positions in the call centers, where previously it was about, hey, like, are they able to get through the volume of calls and maintain their composure, deal with the stress of having high volume of calls. And so something that's really interesting to see now is because AI is able to handle a lot of the lower level calls where it's essentially, going into that, system, getting data out. A lot of people I've talked to are actually starting to recruit people who are really good at having that empathetic side and going deep into it as if they're your personal banker, your personal customer success manager, because they now have more time to actually spend time on the phone to walk through that escrow analysis of, hey, your insurance went up. Here's what this means. Here's how that shows up in these numbers. And the homeowners that they interact with come away with a really good customer experience and actually want to stay with that entity because they know that they feel taken care of. And I think we'll kind of talk shortly after this about how that kind of morphs the structure of servicing in a really exciting way, where I'm excited to see servicing kind of step into the forefront of the mortgage business.
Cool. So that's really exciting, and I'm sure we'll probably have some questions from folks. So we're probably going to take a little bit of a pause in case folks have questions that they want to jump in. I know sometimes folks are here to listen, but in case there's anything that's top of mind, we had a few folks send questions beforehand, but just wanted to open it up in case there's anything that folks here have that's top of mind. And so we'll give it maybe a few more seconds. And I know Google Meets is a little different, but in case you wanted to put it in the chat, you can go in the bottom right, right by that eye icon next to that. You can put a little question there. All right. Oh, yeah. Okay. So great question, Susan. Thank you for jumping in there and being brave for the first one. So the question, just to read it to folks, is how real are some of the recapture rates that folks are hearing about? I do think, obviously with a lot of statistics, it's all based on how they calculate it, but there is some truth to the idea of recapture just doesn't happen overnight. And we can kind of jump into that and basically get into it. So Moin, is there anything you want to say before I pull up this MBA slide?
Sure, and I think this was a really big theme at the MBA conference as well, where it's the idea of what is realistic in terms of my retention recapture strategy, and in terms of what the theoretical upper ceiling is, how do I get closer to that in a way that I'm not spraying and praying that I get in contact, that I'm not spamming people. And so it is definitely top of mind for everyone, and it's one of those things where kind of forums like this help us share insights, so that way we can all reach that upper ceiling.
Great. Yeah, no, I think that's spot on. I think the interesting famous stat that's out there is, the industry average, I think, hovers at around 20, but we're seeing folks that climb, self-reported close to 80%, but even high 40s and things like that. And this kind of just showcases the opportunity. We saw a little bit of this at the end of Q4 2025, where a lot of the public mortgage servicers were what I'd call adversely impacted by prepayment trends. And we're starting to come into that rate level where some of these activities will become more prevalent. And so the question really becomes what is your recapture strategy, where you can basically on the margin move your recapture from, let's say the industry average is 20 to something like 25, 30, 35, has a huge impact on the lifetime value of your portfolio. And so that's what this kind of shows here is we're kind of touching, I think even I saw, and don't quote me on this, yesterday is rates even touched down, maybe even below some of this stats here today. But we're right along that line, and we're starting to see a wave of prepayments, people looking for different opportunities kind of come up. Moin, anything on this from you?
Sure, and probably a question for you. What does it look like if, let's say I, as a servicer, knock this retention out of the park, and then what happens if I don't quite stick the landing relative to everyone else?
Yeah.
What are the states?
Yeah. So I'd say basically even incremental movements in your retention rate can really increase the the value of a mortgage. So, for example, we spend, I think the industry average is 3,000 to 5,000 recruiting new loans, versus within our existing portfolio. If you're able to identify someone who might leave because there's a more attractive rate out there, you're probably going to have to replace them with somebody that just left. So that's another 3,000 to 5,000 that you're spending just chasing the market. And so it's really just not only from that cost perspective, but also from the whether you choose to keep it on your portfolio, that interest income perspective, but also the servicing fee associated with that. And so the key is, it kind of touches to what a lot of the guys that are doing a really good job at this are doing, is proactive monitoring, proactive alerts. And that only gets easier when you're using some of these tools, so that you're not having to run the filter to see whose rates fall within 50 basis points of today's rates on a daily basis. Because the reality is, if you miss one day or you miss it alone, you're probably on a reactive footing there. And so the other thing that just kind of shows is kind of how this has kind of trended over time. But you'll see here is a little bit of consistency when it comes to us hovering at that 20%, 20 to 30% rate.
Sure. And in terms of what people who have the higher rates, what do they tend to do? Because, right now, a lot of the people we talk to are simply doing, hey, like, I'll do a filter for anyone that is below this percentage rate. What should we do? As well as, they had a hard credit pull or something like that. Like, what are the best in class doing today?
Yeah. So I think it's all about utilizing some of the data you have and extracting insights. So the best in class are looking at call notes and not just reading them, but synthesizing insights from that. And I hate to be the AI fanboy here, but that's the great thing about what that can do is, we've all seen GPT or Gemini or Claude kind of read through documents and be able to extract insights in ways that put that top of mind. So folks are analyzing their note base. We've seen creative tools like I think Rocket bought Truebill not too long ago. And basically from that home management app, what they're doing is really understanding, borrower behavior to know, for example, when they are moving in a certain direction, whether it's a life event or things like that. And so I think if you are Rocket has a lot of resources, but if you're a mid-sized servicer and you aren't investing in those tools, it's kind of puts you at an unfair footing because you are competing with those guys. And I think it's key to look at vendor partnerships in that way. But Moin, did you have anything else of note or?
Yeah, I think this actually kind of circles back to what we teed off with the idea of AI being really good at some things where it's routine or you have a set process that you want it to follow. And then you still want to lean heavily on human judgment. So in this case, you do want to lean into AI and technology to really help you scan and kind of like a sentinel monitor your portfolio for anyone that might leave. But then you still want to have the flexibility and control to say okay, how do I want to effectively engage with this person? So that way you get the best of both worlds where, nothing slips through the crack, but then you're also able to figure out how to best keep that business.
Cool. All right. I'll go to the other question that somebody sent in, and it touches on that Homeowners Privacy Protection Act. And so for those of you who were here last month, we kind of talked about the upcoming trigger leads ban, which is coming, I guess, in maybe a week or something like that. So coming up pretty soon. And so I'll take this one. But basically it goes into the idea that, prior to March 5th, what we kind of see is you have a credit inquiry, people can kind of buy that lead. And I've made the mistake of accidentally doing something like that, and you get hundreds of phone calls. And so what that's really transitioning into is those leads can only go to the servicer or somebody with an existing relationship. And so the challenge, though, with that is not relying on that, decreased competitive pool, because the reality is by the time that lead hits, it basically means somebody's already leaving. And so that kind of goes into how we can improve some of those experiences so that we know, that, hey, they're looking at certain things like this, or we're aware that, their term is coming to an end, they might be considered alternative debt products to meet some of their lifestyle needs. So yeah, Moyen, anything else on that you picked up from the conference?
And then just looking at the messages, there was a question where it's why can't I still wait for the trigger if I can pick up the phone and call them? So I think this kind of goes to the idea of like, hey, if I currently have their book of business, can't I still like, do whatever it takes to hold on to it? And I think in theory, that's what a lot of people think is the case. But if someone's already doing a hard credit pull, that means that essentially they've gone through the paperwork, they've done their due diligence, and they're already like mentally, physically, and emotionally invested into continuing with that process. And so from my perspective, what I think is slightly better is how do you get them on the front side before they actually go out and engage other people? How do they actively know at the right time that you have rates that are really attractive or products that make sense for their use case? And I think that kind of circles back to the idea of using AI and the right tools to then help you have that conversation before they've already done the credit pull, before they fill that application, before they're already emotionally invested in continuing. And so that's why I think it's better to kind of do it on the front end.
Cool.
Does that answer the question?
Oh, awesome. Thanks, Connor. We also have, I guess the chat's coming alive. We have Amy as well, who asked, what are some examples of triggers that indicate someone's leaving? And so I think there are a variety of things. I think we all often have that, watch on how our home values compare to rates, how much we can save. And I think a lot of that is basically getting that information in front of folks. Because chances are, if you're not helping them figure that out, they're probably looking to somebody else to figure that out. There's a variety of other things. For example, if somebody's doing a construction project, is how, if you offer HELOC-based instruments, is how you can be involved in that too. And I think, there are life events, other hardship type of events that you can use to kind of indicate that somebody might take the opportunity to see if they can consolidate or, restructure some of the debt. So it's all about knowing the data. I'm sure we've been on phone conversations where, customer satisfaction is also a big part of that. And so it's like, how are you evaluating how happy folks are within your current portfolio?
And I think this goes back to the idea, though, of this shouldn't be like another thing on top of your plate of staying compliant, properly remitting, properly accounting, properly reporting. This is where I truly would recommend finding and leaning in hard with a vendor that does specialize and like does provide this as a service. So that way it's something that you can add on top of what you do and have that human judgment, but it's not like a whole nother workflow that you add on top of your plate. So it should ideally be something that, there are solutions out there today where it does all of this. And then you're able to kind of go in and click, yes, I want to try to keep this person.
Cool. And I'm trying to think of maybe we just knock to the next slide, which I think kind of had this idea of the difference between customer experience, what we're thinking, and what we're actually seeing our customers feel like it looks like. And I thought this is kind of interesting because I've heard a lot of folks just from conversation talk about their digital strategy, but I think this goes back to that how are your customers perceiving it kind of point where there's often, sometimes it appears a disconnect between the experience you're providing your customers and if they agree with that. And I think that kind of goes to basically that point of really looking at what they're saying. And sometimes there's things we're not picking up because, we're busy taking notes and using certain feedback mechanisms to really see how are they doing beyond just, when they call you and if you got the issue resolved. Anything else you'd add on this, Moyen?
Yeah, I think a good question to start is how many of us actually know how we're doing from like a survey or, CSAT perspective rather than the anecdotal, like, oh, thank you, I'm doing fine with my system or with my experience. And I think that's actually kind of where a lot of this starts is like, it's hard to actually understand for those that, don't always call in or those that always call in or those that only have specific questions, like how you're doing. And so like my recommendation is, let's figure out what that baseline is on average across your portfolio. and then you can start to figure out where the particular pain points are and work and crank on that.
Yeah, no, that's a great point. The other I guess, technical thing that I thought was kind of interesting is a lot of people focus on the what we'll call as the new tech revolution impact on what it affects their day-to-day job. But I think there is, some discussion around what that means for employment trends. And I thought the MBA did a really good job of at least addressing what that might mean. I think there was data from the conference that basically talked about how, and I forget the specific number, maybe Moyen, you might know, the number of jobs that were lost to AI alone.
Yeah, I think there were about 55,000 jobs within the US that were lost to AI in 2025.
Okay.
And the other thing that's also relevant is they mentioned that about like the savings rates have dropped to about 3.5%, which means that there's less like margin or barrier for, the oddities of life. And so I think that makes the idea of understanding your portfolio a lot more important, because I think there's a lot more people now that are a lot closer to the unhappy path or the unfortunate reality of the chaos of life. And I think it's important that, we're aware of that and have ways to proactively address that.
Yeah, because I think part of that is also just being aware of how that impacts, things that maybe we will see that haven't been done in waves. So, for example, I'm not in any way forecasting anything on the net impact, but there's certain sectors that might be affected. So it's how do you kind of have this approach of triaging some of those impacts, whether it's somebody experiencing hardship, how do you get in front of them with the traditional loss mitt kind of programs, but also on top of that, how you one is proactively surface some of those things. So, when they need help, do they know how to get help is a big part of that. The other part is even just seeing if there are, differences in behaviors or tendency that might indicate that they might be struggling. One that comes to mind is, when the payment creep happens where you have a homeowner that always pays on the first, it becomes the 7th, the 10th, and then the 14th and the 15th. And so that creep is something that, it could either indicate, something's changed in their bank account, which is, good if, they're able to still make their payment, but it also could indicate hardship. And I'm sure we all would agree here that the sooner we get in front of it, there are usually more options available for folks. Yeah, go ahead, Moy.
Yeah, and so let's say I'm a servicing manager with this knowledge of, hey, there's increasing payment creep and all of that, and I now have to get to loss mitigation. Can I use the very thing that caused this to help solve this problem internally? How can I think about that?
Yeah, so I think what you can think about is how you, what I'd like to call proactivity is, you see some of these things is how do you monitor it is the first thing. And that kind of goes back to, are you using available tools to analyze this and send those alerts? And I think the second part of that is also just, there are things that, we've seen other servicers do that are really innovative. Some of it includes, utilizing, for example, if you track spending patterns at a macro level, you can kind of use some of that to indicate where hardships might be. If you have employment level data and you're in a certain region and you get news, are you using some of that information to analyze the impact on your customer base? It's really just aggregating data both internally and externally. But Moin, did you have anything else?
Yeah, can you talk a bit about like, okay, let's say I get a loss mitt application. Like, can I use AI to help me with that and like kind of push through decisions or?
I wouldn't do that. I think what I would do is really use that to maybe, verify documents and things like that. But I think at the end of the day, that's really where human expertise lies. We've all had the experience of putting stuff in different things and maybe you don't get the certainty that you want. But I think the main thing is really that's where that human financial advisor kind of comes in, is being there to understand what's going on and using the tools to kind of expedite what you need. So, for example, whether that's validating pay stubs and things like that. But my personal opinion is I probably would stay away from that a little bit. But do you have a different view, Moyen?
Well, so I think at the MBA conference, what they mentioned is AI is okay to use, but it's more so the fact that you have to have traceable decisions, you have to have testing evidence, and you have to have human in the loop still, where people sign off on the decisions and understand what went into it. So that way you're using it to expedite, but not necessarily decide.
Right. Right. And so that seems to kind of echo that, thing about, speeding up some of those manual workflows so that you're able to jump to where you need to be. And so I know we're at the 30-minute mark. I think it's incredible some of what the MBA was discussing. I know mortgages are super regulated, and it was great to see the blend of realism when it comes to innovation. And so I think the biggest takeaway, I think, is, it's not science fiction, but it is a tool that we can all think about how to use in a very constructive way. And, it's encouraging to see some of the implementations there. Moin, any closing words from you?
AI is very real. AI has its role in place, and it's one of those things where it's important for us as a community to share best practices in areas that we've seen, growth and real impact.
All right. Well, thank you everyone for joining. If you have any questions separately, you can email us. And we're really excited to continue growing the community. So thank you again for that. And send in topics that you're thinking that we should discuss next month. So appreciate it. Cheers.